All right. Good morning, everybody. Good morning, everybody, and happy Wednesday. Today's November 29th, 2023. Top story of the morning is gold, my second favorite of the shiny metals. Gold is near an all-time high. My favorite, of course, being silver. I like the shiny there as well. Silver not anywhere near its all-time high, but gold is rallying currently over $2,014 or $2,040. Looking pretty good for gold, closing in on that all-time high that we saw in August of 2020. All-time closing high for gold was 2,063. And it's fitting that gold is pushing an all-time high because just yesterday the UK courts ruled that the London Metals Exchange, or the LME, can do whatever they want. They can rig markets. Why? Because, I don't know, because they're big and powerful and their lawyers are better than yours. That's why. So pay attention, you silver squeezers, you apes out there, because the courts just ruled that they can do whatever they want to you because they're more important than you are. That's what the UK courts just ruled. Recall the London Metals Exchange last year rigged the nickel market. There was this Chinese nickel tycoon. Everybody had to call him Big Shot. Whatever. The guy was a total clown. He got caught massively short nickel. He couldn't cover. And of course, there was a short squeeze in nickel prices. And people were making money hand over fist at the expense of the big dogs who were losing money hand over fist. Well, when this guy took out this Big Shot, took out this massive short position, and he couldn't pay, guess what? The market makers were on the hook. All the people who took trades from him that he couldn't cover, they're suddenly on the hook for that. And as we learned during GameStop, which is also up big today, as we learned during then, the second the market makers start to lose money, they just change the rules midstream. Isn't that nice? It's like playing Monopoly against a banker. You will not win. So the LME reversed the trades, canceled trades. Oh, sorry, guys, big mistake, inconvenience for you. Here's your money back. Wait a minute, my position was up $450 million. I don't want my money back. Where's my $450 million? Sorry, orderly markets, stability, full functioning. We got to protect the markets. So your $450 million, that's mine now. That's what the LME did. And the UK courts just ruled there's no problem with that because orderliness, because discretion, because their lawyers are bigger and more powerful than yours. So yes, I like to see metals pushing all-time highs. I like gold. I like silver. I like to see them doing well. But I have zero confidence that those metal prices will be allowed to rise any further than the market makers deem orderly. Because the second things become unorderly, they will rig markets in their favor. That is, as long as people continue to allow crooked outfits like the LME and the COMEX to dictate the price of these metals. And like I mentioned, also going on today, GameStop stock is up double digits on no news for the second day in a row. Looks like the apes are back in the driver's seat when it comes to GME. And first of all, congratulations, apes. I love to see the little guys winning. But again, guys, remember the last time around, they changed the rules and they got away with it. And I just watched the movie the other day, Dumb Money. Great movie, by the way. They did a good job with that. They changed the rules. They took away the buy button in the middle of the night so that you could only sell the stock. And they did it at the same time they pulled down Wall Street Bets on Reddit. They rigged the markets in their favor. They got away with it. So, it's only fitting that we see gold rallying, that we see GameStop stock surging on a day that the UK courts ruled LME, you were allowed to do whatever you wanted just because you're big enough. Also going on today, we've got Signa, one of the biggest property managers in Europe. They're filing for insolvency. It's another chapter in the commercial real estate bust. Signa is a massive outfit. They have billions of dollars in assets. They're on paper, they look great. Their assets on paper are worth double what their liabilities are. They should be fine. Oh, that's right. Buildings are not worth anywhere near what all these outfits are claiming the buildings are worth. See also rigged markets in gold and GameStop. We all know commercial real estate is due to crash. We all know these buildings are not worth what everybody is claiming they're worth. It's all this big game of let's pretend in real estate. And this outfit, Signa, who on paper has enough wealth in the form of these buildings to more than double the cost of their liabilities, somehow they're insolvent. Why? Because the buildings aren't really worth what they're telling us they're worth. But you know what? As long as we don't force anybody to sell any of these assets to cover their debts, as long as we just extend and pretend, it never gets here. As long as Blackstone just closes the exits and doesn't let people pull out of their B-REIT portfolio, well, then they'll never have to actually sell the buildings. We'll never actually get price discovery, and we can just all go on with this fantasy that these buildings are still worth what they were back when the Fed had interest rates held at zero. It's all fake. We've got Jamie Dimon is saying the U.S. is addicted to debt. No big surprise there. And what is Mark Cuban up to? Mark Cuban yesterday announced that he was selling his stake in the Dallas Mavericks. He's one of the most famous owners in the NBA. And then today we find out that this is his last season of Shark Tank. Normally I wouldn't care about this. I'm not a big, let's see what the billionaire is doing, but back-to-back stories. He's selling the Mavericks and he's leaving Shark Tank. What's going on with Mark Cuban? Is he running for president? I don't think so. I don't think he's running for president. It's a little late for him to get in and do that. And I just don't think he would do that. Is he selling at the top? Is he just getting out? I don't know. And Petco swung to a loss. One of the big pet food distributors, sellers, big pet retailer. People are not spending money on their pets. That's interesting because of the strength of the consumer, because of the soft landing, because, the Black Friday and the Cyber Monday numbers were so encouraging. Well, people are not spending money on their pets. And that's one of those luxury items. When times are good, people spend more on their pets. And when times are bad, they stop spending on their pets. Well, that's interesting. And also keep an eye on Trupanion, the pet insurance company that many consider to be a widespread fraud. Because if people are cutting back spending on their pets, then people are going to stop taking their pets to the vet, or people are going to stop paying their health insurance premiums on their vets. Trupanion is already in trouble being targeted by short sellers. And with that, let's shrink my big melon of a head and see what's going on in markets today. And guys, don't forget, hit that like button while we're doing that. It helps with the YouTube algorithm. And if you're new, don't forget that subscribe button. We do this every morning. Have your coffee with the melon heads. We haven't looked at the Fear Greed Index for a couple of days because the market was going basically vertically straight up for a couple of weeks while this thing was still lingering in extreme fear. So I spent 3 or 4 days where I didn't go look at the Fear Greed Index. I come back, and now all of a sudden we're deep into greed territory, even pushing towards extreme greed. So I thought that was pretty interesting. The market is getting a little frothy here. But, hey, perma bear written right on my sleeve, right? Right now, the S&P 500 is up 23 points ahead of the opening, about 0.5% higher. We got the Dow is up 75, almost 76 points, about 0.2% higher for the Dow. And the NASDAQ is leading the way higher, up 108 points. 0.68% higher on the NASDAQ. Number go up. Why? I don't know. Black Friday, Adobe said a thing, I guess. Yeah, stocks go up. That's all stocks ever do is go up. DXY is also up today, about 17 basis points. Had a rough day yesterday. Still below 103 at 102.91 for the U.S. dollar. Looking at the bonds, we've got yields are lower across the board. Stocks up, metals up, bonds up. Everything is up. The 30-year Treasury at 4.48. That yield is down 4.4 basis points. Remember, guys, bond yields and bond prices are inversely correlated. So when you see lower yields, that means people are buying those bonds, sending their prices higher. The 10-year yield, 4.29. That's down 4.3 basis points. The 2-year is at 4.666. Unlucky number. Down 7 basis points on the 2-year. And even the 1 month is down 0.5 point today at 5.388. Looking over at the commodities board, December gold futures trading at $2,039. That's down about 20 cents this morning. That's just off of its high. Not just off. It hit a high intraday of 2,052. Again, closing in on that all-time high of 2,063. We got December silver futures back over $25 at 25.06. That's up about 13 cents or 0.5% this morning. We've got platinum is down 1.5%. January platinum futures at 936. March palladium futures at 1,033. That's down about $34 this morning, or 3.25%. And West Texas Intermediate crude oil futures for January trading at 77.30, up another 90 cents this morning, or 1.18%. We talked about oil yesterday. Keep an eye on that OPEC meeting. It's going on right now. We don't know if they're going to cut supply, cut production again. But oil has been slowly rallying these last couple of days. Let's take a look at the oil chart. here. Well, we've had 2 up days in a row here. 1, 2. You see those 2 green candles there. Still resistance at the 200-day moving average. That's at about $78. Keep an eye on that level here. But again, after this big sell-off, it looks like demand destruction was still in the driver's seat, still controlling the narrative from oil. We'll see if OPEC is able to engineer a rally by cutting production, or are we going to hit our heads on the 200-day moving average and resume lower from here? We'll know within a day or two how that one goes. And take a look at the gold chart. This is going all the way back to the summer of 2020. I got this red horizontal line here on gold. There's your all-time closing high at 2,063 from back in August of 2020. We crashed. We came back to that level in March of 22. Came back down again. Mr. Slammy came back up in May of this year. Again, Mr. Slammy shows up, and now we're back approaching that 2,000 level. Now, this is interesting, guys, because this is not a flight to safety we're seeing in gold. That's not what's going on. If it was a flight to safety that was driving gold higher, we wouldn't have the S&P pushing 4,600 right now. So it's not a flight to safety if gold is rallying along with stocks. Now, we do see bonds rallying. The 10-year yield has fallen substantially in the last 3-4 weeks or so. This is just everything rallying. The price of everything is going up. Is this just a front running of the next wave of inflation? Is everybody just saying the Fed is going to zerp and burr, and so the value of everything is going to go up? Are we sure the Fed is going to do that? They probably will. History says they probably will, but will they do that? It's not set in stone, guys. Everybody is just carrying on like any day now. They're going to lower rates. They're going to start printing money, and the value of everything is going to go to the moon. I'm not so sure that's a safe bet. It could happen, or it could not happen. But right now, gold is acting like it's already happened, trading over $2,000 an ounce. Now, let's talk about rigged markets again here. LME wins nickel crisis case as UK rules against Elliott. Challenges by Elliott and Jane Street were dismissed, and Elliott says it plans to appeal Wednesday's high court ruling. This story just grinds my gears. The London Metal Exchange won a UK court challenge by Elliott Investment Management over its controversial decision to halt a runaway short squeeze in the nickel market last year, removing one of the biggest threats facing the LME as it seeks to move past the crisis. Yeah, move past the crisis. Sorry about that few $100 million we stole from you. Let's move on. Can't you just let it go? Gosh. Challenges by both Elliott and trading firm Jane Street were dismissed, according to a ruling on Wednesday. The judge said the exchange's executives should be granted wide discretion to make the urgent decisions that they did. Why? Why do they get to change the rules the second they start to lose money? Why, Judge? I could say something nasty right now. I don't want to get myself in trouble. Why, Judge A-hole, are they allowed to just change the rules the second they start to lose money? You elitist, arrogant prick. There you go. I said something nasty. Can you tell this case gets under my skin a little bit? The LME was catapulted into the global spotlight last March and drew widespread criticism after it suspended the nickel market and retroactively canceled $12 billion of trades. Oops, we lost $12 billion. Do over, take my ball and go home. Elliott sought to have the cancellation declared unlawful because it is unlawful, claiming the decisions cost it more than $450 million. The hedge fund said it intends to appeal the court loss, while Jane Street said it will evaluate the next steps. Nickel prices initially started rising last year as the invasion of Ukraine sparked fears about the impact on supplies from Russia, but the spike accelerated as holders of short positions rushed to close out the trades. Tsingshan Holding Group faced billions of dollars in trading losses as prices jumped more than 250% in little over 24 hours, and the LME's decision to cancel trades on March 8th effectively served as a bailout for the world's top nickel producer and the other holders of short positions. And that is incorrect. They did not bail out the nickel producers and the holders of the short positions. They bailed out the market makers who took the other side of that trade. That's who they bailed out. They didn't give a hoot about these Chinese nickel producers. The LME was on the hook for delivery of all of this nickel that they would have had to go into the market to do, because when you allow Big Shot, Tsingshan, whatever the guy's name was, when you allow him to place those trades, you are on the hook for it if he can't pay. And since they allowed him to make those trades, why? Because they were collecting the fees and they didn't think they'd ever have to cover it. That was the time to worry about it, not after the trade went south. But then the judge comes in a year later and he says the LME is to be allowed a margin of discretion in respect of its approach to the matters to be considered when assessing orderliness. That's according to Judge Jonathan Swift, a-hole, said in the ruling. What a bunch of elitist malarkey. Look, the LME is to be allowed a margin of discretion in respect of its approach to the matters to be considered when assessing orderliness. He doesn't say anything in that statement. The only word there, the only operative word here is orderliness. Oh, that's why you robbed hundreds of millions of dollars from people in the interest of orderliness? Maybe the orderliness of your own pocket, not the orderliness of markets. Orderly markets don't reverse $12 billion worth of trades after they go the wrong way for the market maker. Anyways, I better get off of my high horse on this one because this really got my blood up today. I cannot believe that. Well, I can believe it is so predictable how they ruled, but I didn't think they would do it out in the open so much. And GameStop is rallying again, too. Again, guys, they are allowed to rig the markets. History has shown the second it doesn't go their way, they will rig the markets and clean you out. And, well, GameStop is up another 13% this morning after being up 13.25% yesterday. So 2 big up days in a row for that one. Good luck to the apes. I like to see the little guys win. Hopefully they don't just change the rules again. Well, let's talk about this story because this is a bigger story than I think it's getting credit for in the press, mostly because it's on the other side of the pond. But this affects us here in the States too. Europe's Signa toppled in property rout. And keep in mind, guys, it takes one big high-profile defaulter insolvency case to make everybody look at their real estate portfolios and say, oh, God, maybe we shouldn't be holding this crap. It only takes one to start the selling, and that's when price discovery happens. Rigged markets always fail eventually. Property and retail giant Signa declared insolvency on Wednesday after last-ditch attempts to secure fresh funding failed, making it the biggest casualty so far of Europe's property crash. Controlled by Austrian magnate Rene Benko, the group is an owner of New York's Chrysler Building, as well as several high-profile projects and department stores across Germany, Austria, and Switzerland. The multi-billion-euro group, whose tentacles reach from Germany's best-known department stores, Berlin's something I can't pronounce, to the country's top department store chain Galleria, and a project to build a skyscraper is set to send ripples across the continent's embattled property sector, not just Europe's property sector. This could affect the States as well. And let's see there. I had something. Here we go. The group, which values its assets at 27 billion euros or $29 billion, is made up of numerous subsidiaries. JP Morgan estimates its liabilities at 13 billion euros, which I guess is about $12 billion. So right there, those numbers, guys, just goes to show you what a house of cards, what a steaming pile of smelly excrement the commercial real estate market is. On paper, right now, this group is worth $29 billion, even though they've got, about $14 billion worth of liabilities. So they should be able to sell half their buildings, cover all of their liabilities, and still be something like $14 billion in the black. But they can't do that. They're insolvent. So their assets are not worth $29 billion, are they? You ain't got no assets, Lieutenant Dane. That's why. Because these buildings are not worth $29 billion. They're just pretending they are right up until it's time to borrow money. And then the people who are going to lend them the money are like, those buildings aren't worth what you say they're worth. How come nobody is allowed to actually mark these things to market, what they could actually sell them for? Oh, that's right, because banks will be immediately insolvent if we do that. And some of the biggest wealth and asset managers in the world will lose tens of billions of dollars if we do that. So we're all just going to keep pretending these buildings are still worth $29 billion, even though one of the biggest property owners in Europe just went belly up when on paper they should have a 2-to-1 asset to liability margin. Its insolvency leaves a trail of half-finished construction projects across Germany, including one of the country's tallest buildings. It's been making steady progress on a planned 64-story Elb Tower skyscraper in Hamburg until it stopped paying the builder. Whoops. That might be a problem. It's tough to build buildings if you don't pay your builder. See also the whole country of China. Of course, the builder halted work. Construction has also halted at 5 other Signa sites in Germany. Dozens of banks, insurance companies, and pension funds have over the years financed and invested in Signa's companies. Bond sales, prospectuses, and Signa's presentation seen by Reuters show. And guys, this is the punchline to this joke. is who is invested in this company. Dozens of banks, in other words, your money if you're in Europe, insurance companies who are supposed to be there for you in the event of a catastrophe. Well, they've already lost your money because they invested it in a skyscraper where they didn't build the building. And pension funds, your retirement, that's who's actually holding this stuff. In other words, you lost this money. You may not think this affects you, but it's your pension, it's your insurance company, and it's your bank that lost the money. And who do you think is going to be on the hook to make up those losses when everything goes belly up? They will say these insurance companies and these banks and these pension funds are too big to fail, too systemically important. We have to have mercy and empathy for people. And so what they'll do is they'll print money and lower interest rates. In other words, they'll rob you for your own good. Every time these guys mess up, it's always on such a colossal scale that in order to maintain orderliness, see also that case on the LME, they'll have no choice but to rob you. So that's going on in Europe. And let's just talk about Cuban a little bit here. This is interesting that these stories happen back to back. I don't know what's going on in Mark Cuban's life while he's doing this. Is he selling at the top? Is he planning some foray into politics? Is there some personal thing going on? But we're just going to go through the headlines here. Mark Cuban selling majority Maverick stake to the Adelson family and NBA stunner. This was yesterday. And then today, Mark Cuban says he plans to leave ABC's Shark Tank after season 16. So normally I wouldn't care about this, what these flashy billionaires do when the cameras are rolling. I really don't care. But these two stories back to back, there may be something else going on there. We'll keep an eye on that one. Let me know in the comments, what do you think is going on in Mark Cuban's life that all of a sudden he's leaving Shark Tank and selling the Mavericks? That's kind of his thing with Shark Tank and the Mavericks, and now it's not. So I found that kind of interesting. And let's talk about this one. Petco stock plunges after surprise losses reported and outlook is slashed amid a challenging consumer environment. What challenging consumer environment? The soft landing, the strong and resilient consumer, Black Friday, Cyber Monday numbers were so good. Oh my God, markets only ever go up. Not according to Petco stock. People are not spending money on their pets. So maybe that's why Black Friday was good. Everybody's going to let their dog die so they can get a flat screen TV. Is that what's going on? I just call them like I see them. Shares of Petco Health and Wellness, ticker symbol WOOF, were down 14.3% in pre-trading on Wednesday after the pet care product retailer reported a surprise fiscal third quarter loss and slashed its full year outlook and said it was taking swift and decisive action to boost performance. The company swung to a net loss for the quarter on October 28th of $1.24 billion or $4.63 a share. That is a loss of $1.24 billion. That's from net income of $19.9 million or 7 cents a share in a year ago period. So Petco is losing money all of a sudden. That kind of came out of nowhere. And well, the stock is getting crushed pre-market right now, down 14.5% with just a few minutes until the opening bell. And that's interesting. Keep an eye on this one, guys. Trupanion, which has had a rough year to date. Trupanion started the year around $48. Went as high as 65, currently trading at 27. The short sellers have been all over this one this year because there's stories all over the place of people saying that this is a fraud, that they've paid their premiums, and then the second their pet gets sick or they need surgery, Trupanion says, nope, it's not covered, and you end up getting nothing for your money. Apparently, this guy used to sell cigars out of his tent, the CEO of this company. There's a lot out there. Famous short seller Mark Cohodes has been following this one for a while. The stock has been getting crushed this year. And if this Petco story is any indicator, then Trupanion has an even harder time ahead of themselves. Last one I want to talk about, JP Morgan boss Jamie Dimon says the U.S. is addicted to debt, you think? And has created a dangerous sugar high in the economy. Where were you in 2021, Jamie? This is exactly what I was saying for years. Sugar high is right. America's debt problem has caused a dangerous sugar high for the economy. The JP Morgan chief pointed to the enormous surge of new debt taken on during the pandemic and during Black Friday. Keep in mind, the only reason Black Friday was so good is because everybody's using buy now, pay later. In other words, debt. That money propped up the economy, but was like heroin in the hands of consumers. And now the economy is going through withdrawal. I'm not going to get too far into this because I've said this all on this channel, guys. But Jamie Dimon is right. I am not president of the Jamie Dimon fan club by any measure, but that was a sugar high or a heroin high, as Jamie Dimon is saying. And now we're all going through withdrawal. This idea of the soft landing, guys, it is a fantasy. It just it never works that way. You cannot dump trillions into the economy, lower interest rates to zero, and then knee-jerk react and take away that money and then start quantitative tightening and raising rates. Of course, March was only a preview of what's to come. Second, third, and fourth largest bank failures in U.S. history happened in March. And then, of course, they started printing money again in order to solve that problem, i.e. kick the can down the road a little bit longer. Thank you, Mr. Charles Coughlin, for your super chat, sir. He says, remember when the tables are rigged, but it's the only game in town referred to as illegal gambling? Rest in peace, Charles Munger. That's right, Charlie Munger, the number 2 man at Berkshire Hathaway, passed away today at the tender age of 99. Interesting. I wonder who was going to be taking over at Berkshire Hathaway because everybody's checking the pulse on Warren Buffett this morning because those two have been at the helm for a long time over there, and we'll see who is in line to take over at Berkshire Hathaway. But remember, the tables are rigged, but it's the only game in town. It's not necessarily the only game in town, guys. There are ways to get your money out of their rigged, i.e. you can own this stuff. You can own this stuff. This is my silver Bitcoin wallet, courtesy of my buddy Patrick Hakeem over at SatPulse. I'm holding up a half ounce of silver and a little bit of Bitcoin right now is stored on that. You can get your money out of their financial system. That being said, that introduces a whole other bag of risks, right? If you own physical precious metals, you need to take your personal security seriously. You need to figure out a way to keep that safe. Are you going to let somebody else store it for you? Well, then you need to make sure you trust the people storing that and that they don't have any leverage or counterparty risk. I like Bitcoin, but of course, there is no more wretched hive of scum and villainy than the cryptoverse, where Changpeng Zhou, Sam Bankman-Fried, and all those other high-scale crooks, they're rigging markets and Tether. Now, you can own Bitcoin and take physical possession of your Bitcoin and private cold storage, but still you have a market that's being manipulated by the stable coins and the exchanges there. So, I mean, you're right. It kind of is the only game in town. There are other games, but they have their own rigged elements as well. The best thing you can do is be vigilant, guys. Try to steer clear of the crooks. Try to figure out who they are. The time to worry about who the crooks are is during the good times. That's the one thing I'll tell you. When Bitcoin is running vertical, when gold is running vertical and stocks are going vertical, that's when you need to be worried about who is secretly insolvent. If you wait until after the decline stops, it's already too late. And, I tried to warn people. Everybody was telling me about, DeFi, I can stake my ETH on this platform, or, Terra Luna, I'll get yield if I do this. And I remember all through 2021 telling people, guys, they're promising you a risk-free 15% return. There is no such thing. You need to run, get your money out. I don't trust those platforms. And one by one, they all went belly up last year. So you're right. It is rigged, and it kind of is the only game in town. Just be careful, guys. Thank you very much, Charles Coughlin. I appreciate the super chat, the support of the channel, sir. Thank you, Steve Woitis. Says, could gold be sniffing out future stimulus? I do think that's in play there, Steve. I do think that's partially what's going on there. Sniffing out future stimulus. Gold runs ahead of inflation, right? Gold made its biggest move in 2020. The inflation didn't show up until late 2021, 2022. Gold actually didn't do very good during that inflation. So gold runs up in advance of inflation. So it's possible gold is predicting Zerpenberg here. Again, I'm not sold that that's necessarily what's going to happen. Upcoming election could use a better economy. Inflation be damned. They will. I'm trying not to get too tinfoil hatty here. Will they outright rig everything because of an election year? Maybe not, right? 2008 was an election year, and everything went to hell in a handbasket during 2008. So 2024 may be the same thing. The only thing I can tell you that reverse repo, by the way, reverse repo was up a couple of billion yesterday, still about the same level. Reverse repo gets to zero sometime early next year. It's not going to be an instant liquidity crisis when that happens. At least I don't think so. But they're going to have to do something to shore up liquidity next year. They probably will lean on the Federal Reserve to try to get them to do something. But the Federal Reserve is not necessarily a political entity. The Treasury Department is. So maybe they'll start running down the Treasury General account next year in order to reduce the issuance of new government bonds. Maybe that will be how they shore up liquidity. But the election probably will play a role. It certainly played a role in oil prices last year. So I wouldn't be terribly surprised to see it. Again, inflation be damned. People pretend to care about inflation after prices have already gone up. Politicians never worry about inflation while they're printing money and spending debt. So, yeah, inflation be damned. I think that is accurate, Steve. And thank you, sir, for the super chat and the support of the channel. Thank you to Nashville Pasta Man, who says, Buddy is in logistics at Mars Pet Care. They're reworking lines to produce more lower-end foods. People are shifting their spending, and production is responding. That's a great point, Nashville, and thank you for the support of the channel. I didn't get to this in the Petco article, but it's funny you should mention the lower-end foods because let's go back to that Petco article. They said, among actions it will be taking amid a challenging environment was the introduction of national cat and dog food value brands. So Petco is doing exactly what you're saying. There it is, the introduction of national cat and dog food value brands. So they're doing the low-end pet food off pet food label. That's one of the responses that Petco is taking. And, well, that is exactly what you're talking about here, isn't it, Pasta, when you're saying more lower-end foods and people are shifting their spending and production is responding. It's fun. Interesting. Very good call, Pasta Man, because it was actually right there in the article. I just didn't read that far down, but you're absolutely right. It's the production is shifting for the change in the consumer, even though CNBC is telling you, oh, the strong consumer, the soft landing, the tree in the nest, all that fun stuff. We know better here at Nobody Special Finance. Thank you very much, Nashville Pasta Man. I appreciate the super chat and the support of the channel, sir. And thank you, everybody, for having your coffee with the Melon Heads this morning. Today is Wednesday. That means at 3 p.m. Eastern Time, I will be meeting with all you wonderful Patreon people on Zoom. We do that once a week. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.